Yeah, if you're looking to buy physical, I think this is a fantastic time. And junior silver mining stocks are also extremely undervalued relative to even junior silver miners are the most undervalued component of the whole precious metals complex.
When it comes to the kind of buying the dip, then this might be a good time for people to scale more into silver.
Yes, absolutely. Same comments apply to gold that I made about the dollar cost averaging. But yeah, if you're looking to buy physical, I think this is a fantastic time. And junior silver mining stocks are also extremely undervalued relative to even junior silver miners are the most undervalued component of the whole precious metals complex. And I think they're presenting the most attractive risk reward opportunity right now, the junior silver miners.
If we can move to the mining stocks in particular, the large ETFs, what is your take on them right now?
Sure. And by the way, since I mentioned it, here's that chart comparing SILJ, the junior silver mining ETF, to GDX. And you can see where we are. This is actually a bullish descending wedge pattern that's forming in that ratio. And once you break out to the upside, you typically get a pretty sharp move. But just if we go back to where we were in 2016 on this ratio, that would mean junior silver miners outperform GDX, the senior gold miners, by a factor of 2. And I think they'll probably outperform by even a wider margin over the next handful of years. But GDX, here's the chart for GDX. I talked about that bearish engulfing candle on silver. Well, GDX had its own last week. And I mean, that's just an ugly, ugly candlestick on big volume. We came down, tested the $35 support. So that's encouraging that we're holding right above that $35 level. And I don't have a chart for it, but the 200-day moving average is not far below either. So you got a nice confluence of support there. Could we go back, pull back just a little bit more in GDX? Certainly, but I think just like silver, we're probably closer to a bottom than a top.
Now, when it comes to, I guess, investing in the mining stocks, what are some of the advantages over the physical metal?
Leverage, but leverage cuts both ways. They're much more volatile. And then there's a lot of additional risks too. Jurisdictional risk, these greedy governments, are the mining stock or the miners going to get their permits they need? Are their drill results going to be as good as the market expects? So there's all kinds of risk, but there's tremendous upside too in these mining stocks. I do think silver is probably going to go to 300 in the next handful of years over the longer term. But I think if you're looking for like 5 baggers and 10 baggers, that's where you find that kind of leverage in the junior silver mining stocks.
No, it is difficult though to pick the right miners, right? So what kind of leverage do the ETFs give? So
here's my kind of going from least risky way to play the mining stocks down to the most risky. And this is really important to know if you're new. I think a lot of people may know these things, but I look at ETFs as kind of like the least risky way to play because you get a diversified basket. So if a couple of mining stocks fail, they go to zero, well, you've got a broad diversification. The next safest way, and this is my favorite way, is the royalty and streaming companies, the Franco-Nevadas, the Wheaton Precious Metals, the Sandstorm Golds. There's a handful of them. I think they offer the second most favorable risk-reward ratio. And then, of course, you got senior producers, junior producers, explorers, and developers. And one thing I see with newer investors is they're always drawn to those explorers and developers. And there's nothing wrong with that at all. But as long as you understand the risks associated with it and you've done a proper cost-benefit analysis, does it fit your risk profile? For me, I like to have about 20% of my portfolio in those explorers and developers. And that's where you have your 5 and 10 and even 20 bagger potential. But there's also more risk.
And when you're talking about 20%, is that for the precious metal component of your portfolio?
Yes, I'm glad you asked that. Because a lot of people just make the assumption like, hey, you're all in on precious metals mining stocks. There's nothing wrong with that as long as you've, again, counted the cost. So I think of your whole financial plan or as a pie, and then you decide how much of that pie you want to be in these sectors. And then of that component that you've decided to put towards precious metals mining stocks, decide what percentage of that you want to be in, top tier royalty plays, senior producers, junior producers, explorers, and developers. And for me, the portion of my overall financial pie that I've put into precious metals mining stocks, of that portion, I put 20% in explorers and developers. That's not right for everyone, but that's right for me.
And when it comes to one of the other markets that we do look at is actually the dollar, because that can give an indication what precious metals might be doing. So could you share with us what the dollar is doing at the moment?
Yeah, the dollar has just been on a tear. And when you see the metals and the dollar rally in unison, like we saw recently, gold and the dollar rallying together, it's usually a sign of a fear trade, and we saw that with the geopolitical tensions. But look at the dollar right now on this long-term chart. This goes back to 2009. You can see the significance of this 103 area. Peaked at 103.82. That was a multi-decade high back in 2016. We poked our head a little bit above that just yesterday. So this is major resistance. And you can see that RSI here on the monthly chart is getting extremely overbought. It's the second most overbought in this whole time series here, going back over 10 years. So I think we're due for a pullback in the dollar. But that said, the trend is up. There's no denying that. You can see this zoomed in a little bit closer on the weekly chart, just going back a couple of years, this resistance. But we're in an uptrend. That doesn't mean we're not due for a pullback. So for the dollar to be back in a downtrend, I'd be looking for a weekly close back below the 200-day moving average. And that's still a ways to go, but we're due for a pullback here in the dollar. And I think that'll coincide with a bounce in the metals.
Can you share with the viewers what kind of indication the U.S. dollar really gives to precious metals? Because some people are skeptical, especially the U.S. dollar index being so heavily weighted in the euro. It seems to be kind of a more euro proxy rather than kind of a true indication of the weakness or strength of the dollar.
Yep, 100% agree with that. It's not a perfect inverse correlation. Some people think, hey, the dollar goes up, metals go down. It's not a perfect correlation, inverse correlation. However, here's how I think about it. It's either a tailwind or a headwind. You can still move forward with a headwind or a rising dollar. And so it's just which way is the wind blowing? It's kind of how I think about it. But you're right. All it does is measure the strength of the dollar relative to a basket of 5 or 6 other fiat currencies. I think 6 total. And the euro makes up the vast majority of that. So if you've got 6 currencies, fiat currencies, that are all falling, losing value, but the dollar's falling a little bit less slow, it's going to show relative strength, but it's still losing purchasing power. So that's how I think about it. I don't put too much stock in it, but I track it just to see which way the wind is blowing.